China is one of the world's economic superpowers. The country has the second largest economy behind the United States, and experts predict that it's only a matter of time before China eventually overtakes Uncle Sam as the world's biggest economy. It's pretty safe to say that when China catches a cold, the entire world is immediately put on high alert. But despite the fact that the Chinese economy has flourished in the past few decades, things appear to be slowing down. And I mean by a lot. In recent times, China has struggled due to the effects of the coronavirus, as well as the real estate crisis that saw one of the biggest real estate developers file for bankruptcy in the US last August. Still, there's a new crisis brewing, one that could very well threaten China's economic success and plunge the country into a recession. So the big question for China is pretty simple. The country just doesn't seem to have enough oil left. A month ago, data from China's ruling Communist Party revealed that the country only had about 40 to 50 days of oil left in its reserves. This is despite the fact that the country continues to consume copious amounts of oil, second highest in the world in fact, trailing only the United States. Considering the fact that China doesn't necessarily produce its own oil, it has now become the world's largest importer of the natural resource. However, as the world continues to change and the geopolitical landscapes shift, it appears that the Communist Party is now starting to really fear for the future of their imports and their stability. When Russia began its invasion of nearby Ukraine, one of the first things the international community did was put a freeze on the country's ability to make money from oil exports. The objective was simple. By hamstringing Russia's finances, they'd be able to put an end to the war quickly. But not China. China continued to buy oil from Russia, and in many ways, countries like China have been the ones bankrolling the war effort. Still, even with Russia supplying more to China, this problem persists. The issue isn't that Russia can't get oil to the Chinese, it's that Russia just doesn't have enough oil to satisfy China's demand. And to make things worse, there's a possibility that China could find itself in the bad books of the international community again. The country has been getting more aggressive in neighboring Taiwan for a while now, and there are fears that they could try to annex the country, kind of like what Russia is attempting to do with Ukraine. If this happens, China will join Russia in being a pariah on the international scale. And this will mean that many countries that export oil to China would have to stop. If this happens, China could collapse, both economically and socially. Now, to understand why China has so little oil saved up, let's take a look at the country's history. Between 1978 and the present day, China's GRP has ballooned from about $150 billion to $18 trillion. Much of this economic growth came from the fact that the country became a huge manufacturing powerhouse. China makes just about everything today, and as you can imagine, it has made the country yacht loads of cash. The issue, though, is that the economic growth has also come at a serious cost. To facilitate the country's manufacturing industry, China had to use a lot of resources, and much of it was oil. After all, oil powers every manufacturing industry. Despite the fact that China had some oil underground, it was pretty clear that this just wouldn't be enough. And as the 2000s came and China had to invest more in manufacturing, the country ramped up its importation of oil from other countries. Today, China gets well over 75% of its oil from imports. The country has strong ties with nations in Africa, North America, and the Middle East, and its status as a global trade hub means it is in a solid position to pretty much leverage on that for trade relations. Still, even though China is able to purchase oil from several countries, there's also the logistical challenge that is posed here. When it comes to China's literal position on the map, moving oil to the country isn't actually so easy. In most cases, the shortest way to access China for exports is through the Strait of Malacca, a narrow stretch of water between Indonesia and Malaysia. The strait connects the Andaman Sea with the Singapore Strait, as well as the South China Sea, where cargo ships can pass to get to China. About $3.5 trillion worth of goods comes through this strait annually, including about 2/3 of the maritime trade involving China and 85% of the country's oil imports. The problem, though, is the Malacca Strait isn't actually controlled by China. The narrow path is in the waters between Singapore, Indonesia, Malaysia, and Thailand, and these countries have begun to grow increasingly hostile towards China, especially with China's influence in the South China Sea growing. No one wants to become the next Taiwan, so many of these countries are now turning to the United States for help. If China continues to play the role of aggressor against these countries, or a hostile force decides to make things tighter along this choke point, China could lose its access to oil. And that right there would be catastrophic. China understands this, and they've been working to strengthen their presence in the South China Sea and its environs for a while. The country has bolstered its navy and is looking to get even more ships in the region in the coming years. Still, the country realizes that a war in this region could be devastating. Another issue that China seems to be facing is the instability in the Middle East. You see, almost half of China's oil imports come from the Middle East, and if there's one thing that this region is known for, it's conflict. From the fights between Israel and Palestine to the Cold War between Iran and Saudi Arabia, and even pockets of conflict in countries like Yemen, the Middle East has always been a hotspot for conflict. And in more ways than one, these conflicts tend to involve several countries. To make things worse, several of these Middle Eastern countries, including and especially Iran, another country that China relies on heavily for oil, are under sanctions from the United States and the international community. So, by still buying from them, China puts itself in a seriously tricky situation. Still, they need as much Middle Eastern oil as they can get their hands on. Besides oil, China also relies heavily on the Middle East for gas. Qatar, one of the world's biggest exporters of liquefied natural gas, signed a deal with China in 2022 to supply 4 million tons of liquefied natural gas to China each year for the next 27 years. The deal was worth $60 billion, and it showcased just how much China relies on this country for its liquefied natural gas. With Qatar now supplying about 20% of China's liquid natural gas, this deal essentially means that both countries will continue to be linked for the foreseeable future. Here's the issue though, Qatar also needs this deal for political and military reasons. As tensions between the country and Saudi Arabia continue to arise, Qatar needs that Chinese assurance to ensure that nothing will go wrong. But for China, you can imagine that this will be tricky. Saudi Arabia is the country's second largest oil source, and with China getting more involved in potential Middle Eastern conflicts, being the potential mediator isn't particularly what the government would want. Think about it like this, China relies on different Middle Eastern countries for its oil and gas, but it appears that these countries don't seem to like each other. So if a conflict were to happen, China would need to pick sides, and the countries that get left out in the cold would pretty much sever ties with China, leaving them without a significant amount of natural resources needed to power the growing economy. Interestingly, Qatar and Saudi Arabia aren't the only Middle Eastern countries that have ties with China. The country also has strong relationships with the United Arab Emirates, Dubai, and even Yemen. All of these partnerships have strengthened relationships and built China's influence across the Middle East. So they really can't afford a conflict at this juncture. Even Iran is getting in on the action. Despite the fact that the country is under some of the strictest sanctions, industry experts have confirmed that it has periodically shipped out oil through the Strait of Malacca. All they have to do is turn off the location transponders of their ships and turn them back on again after a while. How do we know this? Because China's official statistics show that Malaysia is one of the country's biggest oil sellers, despite the fact that Malaysia doesn't have much oil to begin with. So, it doesn't take a genius to see what's going on here. To be fair, you can kind of understand why China would want to rely on Iranian oil. It's much cheaper than getting it from anywhere else. And Iran is also desperate for a consistent trading partner since the country's economy has been wrecked by so many sanctions. So it wouldn't be surprising to see China ramp up its importation of Iranian oil down the line. Finally, let's get back to the main issue here. One of the biggest reasons why China continues to rely on many of its Middle Eastern allies is to fund something called the Belt and Road Initiative. Basically, it's a global infrastructure development scheme launched by the Chinese government back in 2013 that aims to reposition and establish China as the center of the global trade system. Under the BRI, China will invest in infrastructure developments across over 150 countries across the world. These developments will include highways, railways, airports, bridges, seaports, you name it. From here, these infrastructures will be connected, ensuring that trade can be facilitated as seamlessly as possible. And as you can imagine, China will be at the center of it. Considering that the Middle East is a major trade route, China has been improving relationships with the countries in this region. China needs easy access to the Middle East. And Middle Eastern countries also see China's evolution into a market economic miracle and would like to emulate it. To make things even better, both countries are yearning for a future world where the influence of the United States is reduced. China wants to dethrone the United States as a global superpower, and Middle Eastern countries also understand that they will benefit from such a structure. So it's a win-win for them. For the BRI to work, China will need to tap into the supervision that the Middle Eastern countries have over major trade routes. Iran and Oman supervise the Strait of Hormuz, which is the world's most important oil choke point. Djibouti and Yemen also supervise the Strait of Bab el-Mandeb, which controls almost all shipping between the Mediterranean Sea and the Indian Ocean via the Suez Canal. So, this region essentially acts as a point of intersection between three continents: Asia, Africa, and Europe. So far, China has some form of agreement with no less than 21 Arab countries under the BRI. 17 of them have joined China's Global Investment Initiative, and 15 of them have even joined the Asia Infrastructure Investment Bank. For these Middle Eastern countries, the BRI is a simple way to boost investment and bolster their infrastructure, both internally and externally. China has invested over $123 billion in BRI-related projects across the Middle East. So this initiative benefits the Middle East as well as it benefits China. Aside from this, China has also developed solid relationships with Israel and Palestine. Both are in a conflict at the moment, but China has managed to dance around that and not get too involved in it. Still, considering that these conflicts continue to grow, there's the question of whether China will really be able to stay out of it as much as possible. By doing business with these Middle Eastern countries, China now indirectly has a stake in their conflicts too. And when these conflicts escalate to a certain point, China's interests will be affected. The current instability in the Middle East continues to trouble China and its energy interests. We already listed all of the conflicts going on in the region, but there could be even more down the line. And as the Middle East remains a hotbed for political and social upheaval, there really is no telling what could happen here. But whatever the outcomes, you can count on China to be heavily invested in it. And this means that there would be no way to distance themselves from these conflicts. Take this for instance. If a tanker leaves the Middle East or Africa, it most likely passes through the Strait of Hormuz or the Bab el-Mandeb Strait. Both of these choke points are located in regions filled with conflict. Then, the tanker moves south past the port of Swadar in Pakistan, another country where conflict has been the order of the day. Then the tanker heads towards Myanmar, a country with one of the longest-standing civil wars, which threatens China's over $1.5 billion investment in oil and gas pipelines and infrastructure. Finally, the tanker makes its way to the Strait of Malacca and the hotly contested waters of the South China Sea, where, as we explained, many of China's neighbors with significant interests here have been growing wary of Chinese aggression. To secure all these waterways, China has ramped up its military activities. The country has ramped up its use of warships, as well as its general military presence. This is especially notable in the South China Sea, where China is looking to bring stability with it as the major superpower. The country claims that all of this is to avoid piracy in the region, but many experts also believe that all of this aims to strengthen China's presence in the region and to make it even more powerful. Whatever the objective, other countries are starting to notice China's aggression and assertion. There are even signs that China appears to be building military bases around the Middle East and Africa. China can easily say that these investments are simply to bolster its ability to protect its valuable oil imports. But many other countries still believe that there's something more sinister going on. Would the international community let China continue? Will China be able to solidify its ability to avoid an oil and gas crisis? Only time will tell.